Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, Wednesday, September 18th. What a dramatic roller coaster ride. We will break down our take on the reaction to the historic Federal Reserve interest rate cut decision. Ken, so as always, we've got lots to get to today.
Yeah, maybe the most telegraphed rate cut in recent memory, but big gains for the market faded pretty badly by the close. We'll get into that in just a little bit, but found three different stocks in three different sectors. So in the oil and gas space, let's take a look at LandBridge, LB. Also in the financial sector, Evercore, investment bank, EVR. And finally in the healthcare space, let's take a look at OSCR.
Sounds like a plan, Ken. We'll do that. But first, let's take a closer look at these major indexes. Why don't we? So the S&P 500 reversing lower today, closing down 0.3%. Same for the NASDAQ composite, closing down 0.3%. The Dow, very similar here, down 0.25%, reversing lower off highs, getting a little tongue-tied. I'm so excited to talk about the action here today. We'll go to the intraday charts. The Russell managed to finish in positive territory, but giving back a huge intraday gain. We'll go to the S&P 500 intraday chart here. I wonder when the Fed rate cut decision came out. Ken, this reminds me of Joe Fahmy, a friend of IBD. He likes to say, an EKG after eating a cheeseburger, kind of
Yes.
Sloppy intraday action here. So a wild ride. So we could talk about the technical action, but also just give our audience a sense a little bit more of what happened today with the Fed rate cut decision.
Yeah, well, I mean, there was a big debate whether or not it was going to be 25 basis points or 50 basis points. And I went on IBD Live this morning and said that I was expecting 25 basis points, and other people were too. But then there was another camp thinking that 50 basis points was going to be necessary. So I thought the press conference was very interesting. It almost seemed like a preemptive move by the Federal Open Market Committee. Some people saying the Fed maybe could have raised rates at the prior meeting, but Powell during that press conference kept talking about an economy in very good shape here. He talked about inflation clearly headed towards that 2% mandate, and the labor market. He still talked about a strong labor market. Yes, it's a labor market that has softened in recent months, and there were some big downward revisions to job growth, but he's sounding pretty comfortable about the economy. Now, market took that to feel pretty good. The NASDAQ was up 1.6% intraday. The Russell 2000 was up 2.4% intraday. But then you have this selling. It's been a market that's under mild distribution, and all these gains faded pretty badly by the close. So I think maybe it's the market's way of saying that it's not convinced yet that it's still thinking about a slowdown for the economy, whether it comes towards the end of this year or maybe the first half of next year. Still some anxiety about the consumer and the overall health of the economy. But again, Jay Powell sounded pretty good about things. We're just dealing with a market right now that's showing some mild signs of distribution here.
Yeah, so from a technical perspective, the S&P 500 hitting fresh highs intraday, then closing lower. So when we get a downside reversal off highs, Ken, just from a purely technical standpoint, it seems like the expectation is that you could see further weakness for a couple of days. Now, typically, that's what I would say and what we definitely could see unfold, but just due to the nature of the news driven moment that we're in and the fact that we could see a day two reaction tomorrow after the news gets digested a little bit more. I don't think it's a guarantee that we're going to see further weakness. I still think that we're at this key crossroads, and Thursday and Friday are going to be critical. Can we shake this off and close at fresh highs, or are we going to see a continuation of that weakness and a test of some levels on the downside.
Yeah, no question. Tomorrow will be very important just to see how the market handles this downside reversal for the S&P 500. But you have to remember yesterday, there was a stalling session. We talked about it on the S&P 500. It actually closed higher yesterday, but you can see it closed all the way near its low. Volume picked up the pace from the prior session. So, kind of a subtle form of distribution yesterday in the S&P 500, and then today, well, I would call this unequivocal distribution. Kind of a mild price decline, but for the S&P 500 to be up 1% intraday and then reverse lower, volume is still showing lower, but it is going to be higher today. So you've got 2 days in a row where we've seen some signs of institutional selling, and again, tomorrow will be interesting. But like I said in the big picture column last night, that there's nothing wrong with taking some gains in your winners here. And I know some people were doing that before the Fed today. You can still have exposure to stocks because you can see the S&P 500 still holding above all of its moving averages. Uptrend is still intact. We just have to respect the subtle signs of distribution that we're seeing in this market, but also realizing that leadership has really broadened out here. So it's not easy to get really bullish. It's not easy to get really bearish, but two not so great days in a row for the S&P 500 here.
Okay, well, we'll have to see what the remainder of the week brings. Let's go over to the NASDAQ. Can potentially in a vulnerable position here. It wouldn't take much for a close below that key 50-day line. The 21-day line's also there, but it also wouldn't take too much, as we've been saying, to clear a trend line, to get back close to 18,000. So looking weaker than the S&P, but also, not totally bearish here just yet. Maybe in if we get a couple of days of weakness, we can change our minds there. But still, here it seems like it's one of those markets that, in hindsight, it's either going to look like a really good obvious setup, or you're going to see those little bearish signs there. What are your thoughts?
Yeah. Well, again, this is a similar situation to the S&P 500. Volume on the NASDAQ yesterday was higher, showed stalling action just like the S&P 500 did. And then you had a reversal lower today. NASDAQ Composite was up 1.6% intraday. Now, the volume is already updated here for the NASDAQ. You can see volume today much higher than what it was yesterday. So, clearly the 18,000 level is a technical level to watch here. The NASDAQ topped it briefly several weeks ago, but then came right back down to it through its 50-day moving average. It's rallied back above the line, but it's coming into some key support levels here. So I think tomorrow will be just as important for the NASDAQ as the S&P 500. Just have to realize that after two bearish sessions in a row, you might need to adjust your strategy a little bit. Again, maybe think about trimming some positions if you haven't already. Maybe just getting a little more defensive here. But again, we're still on an uptrend for the NASDAQ Composite as well. Just a couple of warning shots over the past couple of days that we need to pay attention to.
Yeah, I agree, especially for technology holdings. I think, scaling back on that a little bit because, we're seeing increasing signs that that's no longer the leading area of the market, right? Maybe aside from some select individual names, to your point about the broadening out, but it seems like there are so many other areas in focus right now, and stock selection, pretty critical.
We have, I think, 15 names in the leaderboard model portfolio, maybe 16, and only 2 are in the tech sector. NVIDIA, that we've held since February 23, and ServiceNow is a relatively new position. We put that on in late July. Have a little bit of a profit there, but out of the 16 stocks we have, only 2 are large cap tech, and then we've got exposure in so many different other areas of the market, leading stocks in leading industry groups. So, the bulls can still kind of hang their hat on the fact that you've got a market of a market of stocks that overall are acting pretty well here. But again, it was just not the best price action for the market yesterday. There was more follow-on selling today. Anytime you see the indexes give back a percentage gain, like the Russell 2000 did, for example, up 2.4%. That's a sign of the big sellers are in here, and nothing wrong with just getting a little defensive.
Yeah. What a wild day. Okay. Let's next go to LB. This is LandBridge, oil and gas stock, bouncing off of the 50-day line, Ken.
Yeah, it's not easy to find, a lot of oil and gas setups here. We can look at USO real quick, just the
Sure.
ETF that tracks the price of oil, and you can see the price destruction that's been going on here. It is trying to rally back, but the ETF here, USO, is going to be coming into some pretty significant resistance levels if it were to continue to come off lows here. So you can see that 200-day moving average, the 50-day moving average, right at 75, just below. So on a pretty sharp downtrend here for oil, which is why you're not seeing a whole lot of great-looking setups in the oil
Right.
and gas space. But back to LandBridge, they've been buying a lot of land in the Permian Basin, and this is an IPO. Had a great debut. I think that was at $17 a share. Ran all the way up to 43, and now it's just kind of settling down. And the 50-day moving average is now showing on the chart here. Came down, found support, and it's starting to rally here. So I suspect this one's going to form a base. It's just going to consolidate, take a breather for a little while longer. Maybe it goes up, over that 40 level and then drifts off. But I like the base that's taking shape here, and you've got revenue growth that's picked up the pace in recent quarters, and pretty compelling growth story. We don't have estimates in yet for this company, but you want to pay attention to IPOs that really show strength after the IPO, even in a kind of an unsettled market here. This one's still acting pretty well.
Yes, debuting not all that long ago at $17 a share, now trading at 37. So a good watch list name there. Okay, next on the list is EVR in the finance sector, setting up the right side of a base.
Yeah, last breakout over that 200 level worked pretty well. The stock ran all the way up to just over 250, and now it's kind of forming a new base here. Two trips to the 50-day moving average, found support each time. And if we switch over to the weekly chart here, there's some good tight action in recent weeks on the weekly chart here. So nice setup. I particularly like the fundamentals here. A lot of these investment banks make a lot of acquisitions. They grow through acquisitions. I was looking for acquisition activity for Evercore because I'm seeing big revenue increases at this company and also pretty strong estimates, but haven't been able to, find, what's been driving this newfound growth. It doesn't look like it's been acquisitions, but still doing a little work here. This industry group ranked 31 out of 197. Very strong group. There's probably 6 or 7 names in this group that are setting up right now. So the bulls, stock market bulls, at least right now, like the setups of a lot of these financial stocks. So we'll see if the market is going to let them run or not. But like we said, tomorrow and Friday is going to be pretty pivotal days for the market.
Absolutely. Really like the relative strength here, and that supported the 10-week line. Okay, next on the list, Oscar Health. We had you analyze this one this morning on IBD Live, Ken. So let's take a closer look.
This is a stock that has a lot of the characteristics that we like to see. It's supposed to turn its first annual profit this year, and then really growth is expected to pick up the pace in 2025. It's a health insurance firm, sort of a kind of a different type of health insurance, a hybrid of the HMO and PPO model. But this is a stock that is in a very strong industry group. Again, third out of 197. So tells you that there are some other stocks in the group acting well here. Oscar Health is good one to watch here. You don't want to chase it after so many up days in a row, but as the stock comes into its most recent high there of 23.44, again, you might expect the stock to drift lower here, move sideways. If it doesn't in light volume and does it in pretty orderly fashion, you could see a good entry here. But fundamentals are in check here, and several up days in a row. Again, don't want to chase it, but you want to just watch for a little pullback here, and maybe you get a better entry.
Okay. Well, Ken, as we wrap, what do you think investors need to be focused on the most for Thursday and Friday? It seems like A, assess your portfolio. How are your stocks doing? And then B, see where the strength is in the market. Where is the money flowing? And then of course, how are the indexes doing? Are they holding up? Are we seeing any interesting divergences there? Are we seeing further signs of weakness? Can we have a bit of a recovery after a volatile day? Seems like those are the things that I'm keeping in mind.
Yeah, I want to reiterate that I think it was a very dovish press conference by Fed Chairman Powell. He seemed to be very optimistic about the economy, acknowledged some softness in the labor market. But the other thing he said that I didn't mention yet that I thought was uh, uh, interesting, and of course I just lost my my train of thought. But no, he was just talking about he has not seen any economic data in recent weeks that is leading him to believe that the economy is headed for, or the likelihood of the economy headed for a soft spot. He's just not seeing any information, and I thought that was important too.
Yes,
So it was a
especially with the
dovish,
bigger cut
yeah.
because
I mean,
we have.
it was mostly a dovish statement. So listen,
Mhm.
I think the Fed's doing a great job. The 50 basis point cut, the market initially liked it, but right now we're dealing with a market that's under a little bit of distribution. Can't stress that enough. So you just want to take the market action day by day, and by the end of this week, we should have a good idea of which way this market, wants to go. Just seeing some yellow flags out there right now after two kind of tough sessions in a row for the major stock indexes. But again, seeing a lot of good action underneath the surface too. So don't want to get too bearish, don't want to get too bullish either. Just kind of
Right.
take it as it goes here.
Exactly. Yeah. And I think taking a step back, just like the rate hikes were such a headwind for the market, theoretically, rate cuts should be a tailwind, but we want to see that showing up in the charts. That's number one. So,
Cheaper money is good for consumers. It's good for corporate America. It's good for corporate earnings. So, a lower interest rate environment typically is good for the stock market. So, even if we do pull back here, hopefully it's an orderly pullback. But again, Jay Powell seemed pretty confident about the state of the economy here, and we'll see if he's right. I think the market is still a little jittery and might still be expecting more softness in the labor market, but we'll have to see.
yeah. All right. Well, thank you, Ken, for your insights today. And thanks to everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. And we hope everyone joins us, investors.com/IBD Live for all the details there. We'll see you in the morning. And then we'll also see you right back here tomorrow after the close.